this lecture video. In this lecture video, we are going to look at the third illustration on complex group. The draft statement of financial position of P, S, and SS on 30th June 2007 were as follows. Your similar figures, just like what you've seen in illustration 1 and 2. But here, P company acquired its shares in S on 1st July 20x4 when the reserves of S stood at 40,000, and S acquired its shares in SS on 1st July 20x5 when the reserves of S stood at 50,000. It is the group's policy to measure non-controlling interest at fair value. At the date of acquisition, the fair value of non-controlling interest in S on 1st July 20x4 was 29,000. The fair value of the 52% non-controlling interest the fair value of the 52% non-controlling interest on 1st July 20x5 was 80,000. Okay. So we are going to assume no impairment of goodwill, right? So this is a similar question, just like the one that we've seen. The only new thing here is the fact that the non-controlling interest is not proportion of net assets, just like we saw in our previous video, but rather on a fair value, right? And this is not a new concept. We will not waste our time going through the determination of NCI or the previous method for valuing NCI. That's beyond the scope of our level. You should go back and read if you have any challenge. Okay, that's it. But we have to let's check the date of control of the subsidiary. Is it on the same date of the date of control of the subsidiary? Is this on the same date as the subsidiary or at a later date? So P acquired its shares on NS on 1st July, right? On 1st July 20x4 when the reserve stood at 40,000, and S acquired its shares in SS on 1st July. So the subsidiary came at a later date, right? Okay. So look at our group structure similar to illustration 1 and 2, right? So 80% in S, 60% in SS. The effective percentage is similar, right? Because the percentage have not really changed. There's just some few touches bringing NCI to fair value. Those are the few things that have changed. So our workings 1 similar to workings example 2 and 3. Our net assets will be similar to example 2 and 3, right? Because the equity retained earnings have not changed, right? Even if they've changed, you can recompute it. So example workings 2, we are okay, right? And workings 3, the only thing that is changing, don't forget our indirect holding adjustment, right? Indirect holding adjustment is the NCI percentage times the purchase consideration that S is provided in what? In SS, and we are adjusting this purchase consideration to reflect that of the parent. The NCI is per the question, right? This is the NCI, this is the new thing that is coming in. It has been given, is at fair value. So we have our net assets at acquisition from workings 2, 140, 153. Goodwill at acquisition date is 9 and 18. You have to show one goodwill. There's no impairment, as the question has already indicated. So the total goodwill to be shown in the account is $27,000. Our non-controlling interest as at opening we were given, so there's a 2980 to 29 and what and 80. Our share of post-acquisition profit of workings 2 will bring it similar to illustration 1 and 2, right? No impairment of goodwill. Then we do an adjustment for indirect holding adjustment, so 22, right? Then our NCI report here of 33,113.8. We have to show one figure, right? Then the last one is the group retained earnings. Still the same figure. The parent 195,000 retained earnings from the parent account. Then share of post acquisition profits in subsidiary, share of post acquisition profits in subsidiary. There is no goodwill impairment for these two lines, and there's no any other profit or loss from subsidiary or subsidiary. There's no any other profit or loss attributable to the parent only, right? So our group retained earnings is going to be similar to this. Similar to the group retained earnings that we saw in illustration 1 and 2. Okay. So here, so you have the P group consolidated statement of financial position as at 30th June 2007. We have assets. We have not tangible assets. We add 140, 410. You have goodwill from workings 327, then current assets per the question 210. You have equity and liability. Our ordinary share is going to be the parent ordinary share per the question. The parent ordinary share per the question is 80,000. 80,000. Then the group retainer is from workings 5. Then the NCI from workings 4. Then the payables per the question. When you go to the question, the payables for parent, subsidiary, and sub-subsidiary added, they have 647. Right, so nice and easy. You go through with at if you like, when you get to this video, it's important to just pause, go through, solve the question, then you can continue and come to the solution. Okay, so thank you very much for illustration 3. We'll look at illustration 5 and illustration 4 and 5. Right, thank you very much for this listening to this lecture video.